Well, good morning, traders, and here's today's update. Now, first of all, let's have a look at the euro. We've been trying to sell this. We took a very small short position earlier. We've still got this pattern from a number of days ago that we're looking to sell into, and we took a small short position, which was literally just stopped out by about 2 pips, rallying above this resistance here. But the hourly chart shows a potential reversal going on right now. So we've got half an hour into the top of the hour. Good rule of thumb is wait for the top of the hour. In other words, 1 o'clock, 2 o'clock, 3 o'clock, to see how the hourly candle shapes up and have a look at the hourly candle pattern. And if you're looking for key levels, you can use that as a trigger to enter your trade. So that one's looking interesting and forming a potential wick top. So we'll have a look at, or spike high, as I prefer to call it. So that's the euro. Still the same strategy, looking to sell whilst we're underneath what's turning out actually to be a diamond pattern, which is also a reversal pattern. And let me just show you that very quickly so we can focus in on some of the majors today. So this pattern here is really called a diamond pattern. Sorry, there's a lot of noise outside from motorbikes. That's our new neighbor. So forgive me if that's annoying you, because it annoys me too. So let's just have a look at this. So I'm just going to draw it very roughly. And this is what you call a diamond pattern, which often takes place at the top or the bottom of trends. So this is a sort of thing that we're looking at. Now, I haven't managed to trim off these trend lines, but you can see that sort of diamond or lozenge formation, which is characterized by a megaphone pattern, which then starts to contract into the center of the megaphone expanding area, and you get this diamond shape. So that's really what we're looking at there on the euro, and let's watch that hourly reversal. So these are our key plays today, looking to sell the majors into strength against the US dollar, and there's no better place to start than with the euro against the US dollar, and that's what it looks like on the hourly chart. So let's quickly have a look at the others. Same applies to the pound, and we're getting a little bit of a reversal on the day chart on the pound here. That one's already kind of started off. Hang on, I want to do that one. The pound's already started off, and you can see this is a pretty bearish sort of pattern. We're holding above this 50-hour moving average, but when you see a lot of spikes, a lot of wicks at the top of the candles on a move where we're getting lower lows and lower highs, that's pretty bearish. That's going to look good to sell into at the top of this hour. What we want to see is this hourly candle on the pound closed similar to the way it looks now. We don't want to see a bullish candle here, which will start to negate this pattern. So that's the plan on the British pound against the US dollar. The Australian dollar, we're going to leave. And let's have a look at the dollar index as always, because this is the key to what's going on. And we saw 2 days ago this spike low on the dollar index. And we're also getting a diamond formation happening here, similar to the euro, but at the bottom of this downtrend on the dollar index. Yesterday was a bit disappointing because we pulled back in, but we're holding above this support level here. If I just move this line up, that line there is now pretty critical, and I'm going to leave that line in there. In fact, you can draw it on. That's at 101.60. We really want to hold above that level today on the dollar index to see weakness starting to take place in the euro and the pound and the other majors. And the reason I've drawn that line cutting off the lower wicks of these two spikes is because they were just spikes. Remember I said this was potentially a false break. The real line of support is here at 101.60, 101.50, where I've drawn that green line. So we want to see that hold above there today. If we can rally above there and create a higher high, seeing as we've got a lower low already today, but if we can make a higher high, in other words, negate yesterday's candle, that'll be very positive for the dollar. I'm not looking for long-term strength in the dollar. I'm looking for a recovery of several percent and then a resumption of the downtrend on the dollar, and we could get up to 105 from 101. That's about a 4% rally. Let's call it 3-4%, somewhere around there would be good enough to see a 300 or 400 pip dip or drop on the euro and the pound and so on. Euro CAD, again, similar to yesterday, we saw this big spike up above that resistance level. Unfortunately, we didn't close beneath it yesterday, so we're still seeing a bit of strength, but there is some sign of weakness. If the euro and the pound, etc., manage to weaken against the US dollar, that'll probably drag them down against the Canadian dollar. And so we're looking for shorts into sort of where we are at the moment, really, on Euro CAD and Pound CAD. I'm not going to talk about the Australian or the other cross. Now, let's have a look at the yen pairs. This is a little bit more complicated because we've got this potential bottoming pattern on the dollar yen. We're actually long on the dollar yen, but we're short on the Australian dollar yen, and we're long on the Canadian dollar yen. So we've talked about the Aussie yen and the dollar yen. We talked about that in yesterday's video. Go and have a look at that. But we're in opposite directions there. I think because, simply just to repeat, I think we're going to see a continuation of this pattern at some stage on the Aussie yen to complete this pattern and move down towards the 80 to 82 level on Aussie yen. Dollar yen, perhaps we can get a little pop up to one of these lines, this green line at 130.60 or maybe even 134. What we're looking for on dollar yen really is a right-hand shoulder to play off, so we can continue to sell this. As the dollar weakens, it'll weaken against the yen too. But we want a right-hand shoulder, something to work off. And at this stage, if we can get up to 134.50, this red line, that might be sufficient. Maybe we even get up to 138, 139 and form a decent right-hand shoulder. But right now, remember, we're starting to form a lopsided head and shoulder. So we've got an angled head and shoulder. It's not straight. And because that line there, we've got a new low on this chart. So we'd probably expect the shoulder to be in a channel line like that. And that takes us up to the 134.50 level, thereabouts. So I doubt we'll get up to 138, 139, but we'll take 134.50. That'll be good enough. It'll hit the top of this channel line, and it'll hit this previous resistance, and it will form a good enough right-hand shoulder. We do really need a shoulder on the right to work off. So with a bit of luck, we can get up there. That would be a great play. Of course, what that's going to do is drag this currency up a wee bit, but I'll continue to look to short into rallies beneath that level. And then at the same time, the dollar yen might get a bit of a wiggle on and go up. CAD yen, we're long simply because, well, similar to the Aussie yen and the euro and the dollar yen, I think we need a bit of a correction on here. We saw a bottoming pattern on the CAD yen. We've got a one up, one down, which is one of my favorite patterns. A break beneath the support, but not holding beneath it. That's really crucial. And I think this one looks pretty good, to be honest. And if I draw a horizontal line there, you can see yesterday's spike. Oh, goodness me, that's so thick. We don't want such a thick line. Let's just reduce the thickness of that. So there we go. That line there that we spiked down through yesterday forms a good level. That's a fake breakout, hoping that it's a fake breakout. But we've also got this hammer candle and then the spike low. So those two candles there, that spike up, spike down, that's called a one up, one down. It's a hammer followed by a hanging man, spike low, doji. You call it what you want. But the key is we didn't break beneath that support. We did break beneath that support, but did not hold beneath that support. And now we've got an opportunity to move up into resistance, and target for this would be about 99, just up to the top there, thereabouts. And maybe we even get up as high as 100 to 101. We'll have to see how that plays out. But all a little bit iffy, the yen pairs, but there are good opportunities in both directions on these three in particular. Euro yen we're not going to look at. We're not going to look at any other yen pairs. Now gold, we just went short on gold. We had a very, very tight stop loss. I'm still looking to short gold into the 1800, 1810 level. So I'm going to continue to try little shorts here, but with a caveat that we're playing very tight stop losses. So every time we take a little, as some people call it, a paper cut loss, that's okay, as long as we take reasonably small position sizes and very tight stops. And look at that, we've got on the hourly chart potential reversal. We'll probably try this one again at the top of the hour for a short into gold, and the same goes for silver. although I'm only going to be trading one of these metals. I don't think there's any sense in trading them both because they'll probably both go in the same direction. So let's just be exposed to one at a time. Natural gas just still holding above $3.15 or so. I expect that will, just probing slightly lower. At some stage, we should get a rally in natural gas. We might go a little lower. I don't know. This is, again, remember, it's the Widowmaker. So that's all a bit difficult if you're not used to trading commodities. So I'd stay away from that, particularly as you need a lot of margin and a big position size. And unless your account's large enough, you're going to be suffering from that one. And then sugar, I'm short on sugar. That's going well, just ambling down. Soya beans are waiting for a rally higher up into that level. We've talked about soya many times. I want to get a rally up there to sell soya. If you're not interested in trading commodities, these won't be of any interest to you. Bitcoin, I think, has got to drop into at least the gap, fill this gap. So we could get down to at least below 20,000. Bitcoin, I don't know. Staying well away from that. And then let's get to the indices. Stock indices, got NASDAQ, S&P, and Dow. I don't know. I've got the Netflix. So once again, I'm just going to wait. I think it's Friday. So is it going to be free fall Friday, or are we going to rally and finish this week strong? Who knows? It's anyone's guess. I think it's best left alone until we get some direction. Right now, we're in the middle of nowhere. For example, SPY, SPX, S&P, stuck in the middle of all of these moving averages. Beneath there, rejected off the resistance level. Quadruple, maybe even what's next from quadruple? Five bluffs in a row. Who knows? But we're diddling in the middle there. But just nowhere, no direction. So it really depends on, is it free for Friday or is it to the moon Friday? Who knows? Same thing with NASDAQ, stuck in the middle of the moving averages. We've got support below us, resistance above us, and we're right in the middle. Not going to touch those. Same with the US 30. And the interesting thing that happened last night after the close of play was Netflix. Netflix you can't see on here, but the price is here up somewhere around about 340, I believe. I can't see it on these charts, but after they reported earnings and so on, Netflix rallied about 15 or 20%. And then the other interesting thing to finish off is go and have a look at Twitter. I put a tweet on both the pound against the South African rand, the dollar against the South African rand. I'm pretty bullish on both of these. We're already long on dollar rand. I'll be looking to buy pound rand as well if we can get a little pullback, perhaps down to about 21. Dollar rand, we've broken up through this descending trend line, and there are all sorts of reasons economically why we should be okay. There's the 200-day moving average on the dollar rand. Bounced off it beautifully, rallied up, broke through the downward trend line, and now we've just got this 100-day moving average to clear and a little bit of resistance up above us at around 1770, 1780 before we get up to 1860. And I think that's inevitable at some stage, simply because the country has run out of electricity. Have a fantastic trading day. I'll speak to you on Monday.